Good afternoon, everyone, and welcome to the Traders Group. This is your host, Gary Humeski. It is Monday, March the 16th, a little after 4 p.m. Eastern Time. I want to welcome everybody on board, new as well as old. And as always, let's get right through the disclaimer. This webinar is for educational purposes only. I am not a licensed representative or giving any kind of trading advice whatsoever. As we all know, trading does involve risk, especially with options. Okay, escape. Can you guys see this, the Excel sheet here? Yeah, okay. This is what I've got for today, guys. There's a lot in here, as well as some shorts. I want to start with the VIX. I want to start with the shorts first. And then we've got some ETFs. I also found places where you can get 2 times inverse ETFs per the request of somebody else. I said I'd go over that today. So I got a lot to get through. So let's get through the macro picture first. I see that it looks like on the Dow we've had a bounce here right at about this level of support 17,625. Also made a bigger cursor for you guys to see. Let's see where we got today as far as retracements. Well, we kind of busted through the 50% on the way up to the 61.8, 18,039. And there's so many ways you can do this, folks, as far as the Fibonacci. You can do the retracements, you can do the extensions. It all depends on how you believe the market is trending. Is it bullish or bearish? I'm still bullish in this market. Everything is going well. If we do an extension from the last low to the last high to the current low, you see these are the levels that potentially we could get up to. You still have a strong 49 above the 89. The only concern I have is, of course, this DPO. But one thing I see with the DPO is it's getting oversold. It's getting down way below the zero line and it's starting to pull up. It may have a little bit more to go down before it pulls up, but I've seen it just bust right through. So one thing I do see is the DPO is oversold. We do have a change of the hull, which is the best leading indicator that I've ever seen, that I use quite heavily, and it's quite accurate. So that's what's going on in the Dow. Let's see on the S&P. Looks like we just busted the 50% again on the way up to the 61.8, 2,089. We do also have a changed hull. It's taken 2 days for it to do that, last Friday and today. And again, we have an oversold DPO line, the detrending price oscillator, pulling up. The low to the high to the most recent low. So we can see where we're going to have resistance at 2092, and then you guys know when it gets to 2000, it gets to 2100, it's going to be resistance. So these are your levels to look for resistance. And on to our wonderful NASDAQ. A strong PPS pull up. Again, we have an oversold underneath the zero line DPO pulling up. Not as prevalent as the S&P and the Dow Jones, But the NASDAQ has been on its own, it's beating to its own drum. And it's because it's got so much tech in it, Apple and Google and Priceline and everything else. Jerry, you're on board. Keep me cognizant of time. I need to really watch time. Let's remove that. Quickly go to the extensions. Okay, so now you can see where the resistance is going to be 49.43 and the magic number of 5,000 at 38.2. I don't know if this is a head fake, folks. I'm going to be honest with you. I shared with you guys last week, I believe, on Monday's session, this is a volatile market. It is difficult to make money in this market. Did some good calls last week on Ulta, Ann, Men's Warehouse. I don't know if any of you guys took advantage of those, but if you did, we made some money. This is kind of a time where you're either going to buy time and realize your account's going to go up and down because of this choppiness, or you stay out of the market until it starts trending. I'm going to repeat that. The people that are making money this last week are the day traders. I don't care if it's equity or futures or whatever. Those are the people that love this type of up and down market. So again, I don't know if this is a head fake. I don't believe it is only for one reason. On all three indices, I have a PPS trigger with a very strong pull-up. And I see right here there was 3 days where there was support on both the S&P and the Dow Jones. So with all that stuff in mind, just be aware, I'm not 100% sure, but I'm leaning towards this market is going to continue to rally. Now, we do have one very important thing that is going to happen this week, as we all know. Wednesday, FOMC and their forecast. Everybody, the market, everybody in the media is talking about the market being jittery because of potential rate increases. I don't know if they're blaming it on that or it's just typical choppiness. Who knows? But we all do know that the market does react, and it can react pretty violently to this Wednesday. So really be aware of that. The only other thing that, Friday is really nothing. There's no major news coming up. So this will be the big hurdle to overcome if, in fact, we're going to stop this volatility. Tomorrow's housing starts. It is important. However, my feeling about tomorrow is it's going to be kind of flat. I'm hoping primarily bullish, but flat, because the market's going to be waiting with trepidation to see what happens on Wednesday. Okay? And once that comes out, the only other thing we have the jobless claims and the Philly Fed outlook, which doesn't really move the market that much. It reacts a little bit, but a lot of times that's built in. Jobless claims is another thing, so market will react to that. This is the biggie, Wednesday. Okay? We all know Netflix got beat up today. Why did Netflix get beat up? Anybody know? Downgrade. Somebody stole my own thunder. Netflix tumbled as much as 24% Thursday. What is this, Thursday morning? Oh gosh, that wasn't it. Come on. Where is it? It got downgraded today is what happened. By some, I forgot who it is. I've never even heard of these analysts, but maybe I need to use some different semantics. There we go. There it is, downgraded by these people, Evercore ISI, and they brought their target from 450 to 380. How many people think it's going to go down to 380 because of one analyst? Just market reaction, people making money. U.S. stocks rally ahead of Fed meeting. Yeah, okay. We still got to be careful, folks. Would have anybody dared to buy Netflix today? I think one thing you guys are probably learning about me is I'm a fade the move trader. I love to do that because I learned that from trading the E-mini. Fade the move is basically a contrarian trader to the trend. So if the market's going up, then I'm going to buy a put. If the market's going down, then I'm going to buy a call. But obviously at the right time when things are oversold and overbought. So that's what happened to Netflix today. Market did end up, well, let's look at the VIX real quick. Got a hull turned over right here and a PPS trigger. And the DPO is slightly above the zero line and starting to turn over. But these two triggers give me a little bit more confidence that the VIX is starting to pull back. It's had bumped up against the 49.89. And again, we have a PPS hull and an oversold DPO pulling up on the S&P. So the market did rally 220 some odd points. That's good. Okay, let's talk about the VXX and buying some puts on it. Why should we buy puts on the VXX? Well, the VXX is the fear index, right? And it gives us a gauge of what the pulse of the market is. Me and you. Best choice between March and April shows a 6 out of 6 with a 12% average percent move of the VIX going down. If you took 12%, or 1 minus 0.12 to get a factor of 0.88, and where was the VIX today? Okay, you can see exactly what's happening. Oh, by the way, everybody is in the Excel sheet, so you know. I've created a new column. It's called 1 month SD right here. This column here. This column represents this particular indicator that I got from Tasty Trades, Tom Sosnoff. You can go to his website, Tasty Trades. He's also got another one called Dough, DOUGH.com. There's a lot of great successful traders on there. You can follow them, some of their moves. But this is the 1 month standard deviation. Okay, 68.27 potential move of 1 standard deviation up or down. That's what this column is. And what I did is a lot of backtesting and research to find that coincides very closely to IV plus target, which is right here. That's the IV plus target, because it's plus or minus. I'm always using the plus if it's bullish, minus if it's bearish. So just so you guys are aware, that's what this column is, okay? Back to the VIX. Okay, there's a potential extension, 2672, 25, and 23. It's an extension from this move. It could be this move here. I don't remember what exactly I did. No, it was this move. The last high to the last low to the last high, or the high prior to our last high to the low here. That's how you do an extension. So you know where potentially this price can extend to. So here's your targets right here. So from a best choice standpoint, you got a 12% average move. So if you take that 0.88 times it by 2741 to give you a target, could go all the way down to 21 if this market starts to rally and get away from the volatility. So with that, I was looking at the April 27s for $1.49. That's what I was looking at from there. Now, next one I want to talk about is this one here. This comes from the unusual volume service, XLNX. As you can see, I've said marginal seasonal. However, some trader bought 13,890 April expiration monthly, 37 and 41 puts last week. That is a bet of $1,355,760 of pure premium betting that thing is going to go down. It has a BCS probability of 90%, but a marginal, in my opinion. And in order to find it, I believe I had to go to best rating of coordinates. There it is, 320 to 43, 90% probability. Again, crappy rating. Crappy rating. But what did it do today? Wow, popped up real strong. So, anyways, threw it on there. I put that note on there as well, as you saw in the Excel sheet. Enough with the shorts. Let's go to the potential earnings this week. Darden Industries is coming out this week. On the 20th, before market. Now, I got before market from NASDAQ.com. If you ever see this or it's not confirmed, like unspecified time and so forth, you guys can always go to NASDAQ.com, or for that matter, you know what? Well, yeah, you go to NASDAQ.com, go to market right here, and then earnings calendar. Sometimes this site works slow. I don't know why. DRI is what we're looking for, Darden Industries. Darden Industries expected to report before market, and that's where I got that information from. So if you don't see it necessarily on TOS or whatever other place you're looking for winner to confirm where these things are coming out, this information, by the way, that I got here from NASDAQ on the earnings comes from Zach. Okay? So Darden Industries is coming out. What do they historically do? Historically, it's a 100%er, but it started early, so you got to be kind of concerned. I mean, it's like today is the 16th. This is already the 20th. Is the run done? That's using best rating of whole zone. So let's try best rating of whole zone. Let's try best rating of coordinates, which is simply from where you begin to where you end. Well, it's an 80%er. Okay, maybe a little bit more. Let's try best profit per trade. So we're trying to get a comparison of all three. We still have 80% with a lower rating. So where we see is the strongest potential is the best rating of coordinates. Now, why am I saying all of this? Because of the date. I'm looking at the average start date. When you do best rating of whole zone and you snap that area like we're all used to doing, and we just take it for granted, okay, there's the trade. Yeah, it's finding the best rating of that particular zone where you begin and you end. But the rating, remember, is a mathematical formula that Pete came up with. And it's a good one. It's the win percentage multiplied by the average profit. So you have two numerators divided by the average number of days, one denominator. So the longer this is, the lower that rating. The shorter the number of days, the higher the rating. The higher the average profit, the higher the rating. The higher the win percentage, the higher the rating. But I'm going to look at all three. Best rating of a whole zone, best rating of coordinates, best profit per trade. And it's just something I've learned to do over the years using Best Choice. And what I'm looking for is am I getting about the same win percentage, a strong rating? What is the average profit per trade? And does it have legs to extend further into time, which gives me the knowledge that I could buy time if I wanted, because historically I have that advantage. DRI, what did it do today? Nice pop-up. Really nice looking chart, folks. There's the 49 above the 89. Got a MAC starting to turn up. If you want to use just linear regression, you can see this. You know, you'd want to go to 2 years sometimes and see what the earnings are. And earnings growth is 41% over the last 2 years versus the price growth of 11. So there's divergence between price and earnings growth. Economic law says that if this earnings growth continues on its path, that price will eventually catch up. You just never know when. So it's a really nice looking sloping chart upwards. Wow. And here's my extensions. I've already done all this homework. You got a DPO almost ready to bust out. You do have a hull turned over, a PPS, and a MOBO. 3 strong indicators after it bottomed. It's on its way up. It got resistance at the 61.8, which is a very typical pausing point for a price movement at 64.92. It came right underneath that. I'm sure today's high busted right through it, and there it is, 64.96. So tomorrow will be a telltale. Now, remember, we got earnings coming out on the 20th. Oh, there it is. It says before market. So based on the historical average move that I did it over the weekend, it's obviously going to change because of this $1.81 move today. So you guys got to redo the math. There's a lot at the money here, 2,600 at $3. Oh, I did, excuse me. Look at the vol, the IV ranking. It's at the 72% from 0 to 100 of the last year, 252 trading days. So it's at the 72 percentile of its rating. Very high. What does that mean? That means these options are overpriced. Anybody who tries to buy this now is going to have volatility crush after earnings, even if they make it. These are way overpriced. Now, someone can go out of the money and sell calls if you want, or you can do a bull put spread if you want, which probably there's some people doing here based on these open interest numbers between 62. And in other words, they're collecting a credit expecting the stock to go up. So in lieu of that, I was looking more at all of this wonderful interest here, especially 15,000 at the 60s. Now, my suspicion, folks, there's a there's a very huge following of Investors Business Daily, IBD. They have a CAN-SLIM method of determining the valuation of a good or bad stock. They have their top 20, 50, 100. They also give you trigger points of when to get in. And they also teach they never buy options unless there is a minimum of 70. Actually, they don't even buy options. They buy the equity. But everybody else in the option world teaches don't ever buy an option unless you have a delta of a minimum of 70. And as you see, it's 84 right here. That's not the one I chose because I like to do at or out of the money, get bigger bang for the buck. So I had looked at the 65s, and I had priced them at, when I did this, at $1.10, which is what you could have bought them for on Friday. So they're more expensive now. Probably get it for $1.80. But I would probably stick to that. I wouldn't go out to the 67s. Okay. Adobe is coming out as well this week. I think it's a good company. Adobe's primary 61% of its revenue comes from its Clear Cloud, and it's making a transition to everything on the cloud. It's based on a subscription service from $9.99 at the low end all the way up to, I think, $100 and some odd dollars. If you guys want to learn about a company, now there's a company called Trefis. Trefis is, a lot of times it'll have the company profile right here. It doesn't. Well, this is for DRI. Let's look at Adobe, ADBE. There it is, company profile. If you click that, this is provided by a company called Trefis. Now, who is Trefis? Trefis is a bunch of ex-New York Wall Street analysts and MIT smart people, and that's what they formed as this company. And of course, Thinkorswim, TD Ameritrade is contracted with them to provide this information. Creative Cloud is 61% of their business. It is growing tremendously. And you can read about the company and their valuation and so forth. You know, what does it do? They're expecting the service to increase phenomenally over the next year to 2 years in their transitioning. So, Adobe. Coming out tomorrow after market. What does Adobe historically do? What did I put? 90%. Evidently, there's another trade in there that I must have found. I'm still getting 80%. Let's see if I download this information, if I don't find something different. Well, it's only an 80% winner, evidently, with an average move of 7.11. So not that strong from a historical standpoint. I mean, 80% is 80%. It's still strong, but I believe there's some good interest in this thing. You see a good amount of open interest on the call side, as well as right here on the front end. However, I would not buy the March expiration because of the volatility of 70.78%. You do have a $7.53 potential standard deviation move. You got a PPS break, a Hull break, and this turning over. The DPO starting to turn over and pull up. So because of that, March is way overpriced, these 80s. Looks cheap from a dollar standpoint, but trust me, it's not. You have an IV of 58.53, where on April it's only 29. That's a huge difference, folks. That's 30%. So April, if you're going to do this, if it's something you're interested in, the 80 strike price, I had it originally written for $1.76. Last one on the earnings, and be careful with this. Lulu, historically very strong. 18.96% average move, 100%, 7 out of the last 7 years. It's sitting kind of in the middle, about 55% of its historical movement. You can see all these other years where it popped up. Last year, definitely just exploded here. Now, this could have been a loss of earnings here, but it just absolutely took off in April. So bottom line, we're going to be looking at April. Where is it sitting at now? Right at the bottom. Starting to crawl its way back on up. There's been some negative press about Lulu. Okay, one of our members said, I'm sorry, Robert, you sold a Strangle 85.75, not on this. Must have been on the previous one we're talking about, Darden Industries. I included an article, folks, for you to read so you can get more informed right here. All you do is click that. That'll take you automatically to the article, Why Lululemon Still Has Considerable Upside, and they go through a whole analysis of why. Read it. Okay. So that's Lulu, and I had put the April 6750s. Right there. I kind of like this chart. DPO's, Mobo's oversold, DPO's pulling up. I got a hull turned over. I got a PPS break. Linear regression is pointing upwards. The 49 is above the 89. This looks like a breakout. Now, it could be because of today with a $228 move upwards. We'll see. So that's coming out, Lulu. Not until next week, before market, on the 26th. Okay? Let's move on. Adobe. Okay, so Adobe. Robert, one of our members, had bought a Strangle. Remember what a strangle is, folks. It's like strangling somebody from the left and the right, but your hands are not 100% even. And, oh, you already sold it. Oh, okay. Okay. So we won't go into the minutia of that. Seasonal. All my Gary's 11 that I track heavily and I trade heavily, almost all of them are seasonal ups now. As a matter of fact, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. Every single one. Every single one of those are longs, starting about right now. So you can almost pick your poison. Now, I want to talk about one, Priceline. Make sure I got accurate data. $90%er. What did it do today? See, it's still kind of flat, right? What's this company? I mean, it's smoked earnings, folks. Look at that. This is just people taking profits, right? You see, it's kind of almost, it went down a little. What did it do today? Priceline. Okay, up 67 cents. It's still meandering. It hasn't moved. Folks, if you know anything about Priceline, that thing can move $25, $30 plus at any given time. One of our members is one of our astute members, there it is, wrote me this. Sorry, I should strike out the name to protect the innocent. But it's interesting. He subscribes to a service called This Rating. He's planning on doing some things with Priceline, but this is really what I wanted to show you. He subscribes to this service, and it's very interesting. They're putting a target on this. Oh, and I think another member of ours, Bob, I think you even emailed me about this, where somebody's giving a target of, or no, it was CMG. Excuse me, that was about CMG. I'll talk about that in a second. But this is interesting, folks, on Priceline. It's telling you the announcement date of 2/19/50, or no, that's when it already came out. But very interesting growth record information, EPS. This kind of stuff is invaluable to have. Now, I'm realizing this is for the one that's already transpired. Earl, I need to ask you a question. I believe you're on board with us today, are you not? Yeah, you are. Earl, let me ask you, this information comes out, I'm sure, prior, well, obviously, versus the actual. Does this information only come out after earnings, or do you get this information prior to? As you're answering that, I'm going to go on to another email that I had sent as a response to, where are you, Robert? There you are. This is, well, not that one. Maybe this is this one. No, it's not. Oh, no. I know where it says. I know where it's at. Very interesting, because I need to show you about CMG, folks, because a lot of people, I think, there it is. No. Why is this? Oh, there. Credit Suisse gives a target of 785. 785, Credit Suisse on CMG. I believe I responded someplace. Oh, it's Priceline. I don't know if I responded here. No. Well, all right. I'll just go through the math. It's kind of interesting. So you say, okay, 675 or 785. 785. Wow, right? Well, where is that in linear regression? 714 on a 6-month, right? But let's go to seasonality. Let's just do, let's see, I think I did best. No, let's leave it at this, 11.117. All right, 11.117, and where did CMG finish off today? CMG finished at 7, let's do 678. $678 times 1.1117. 653, so it's not necessarily impossible, folks. Now, it could take a little bit more time, so if you want to buy some time on this. Now, another thing I want to talk about is I took a position in CMG on Friday. On Friday. Who would have taken a position on Friday over the weekend on CMG or on any stock? Again, that's called fading the trade. That's what I do a lot. The market's down. It's getting beat up. You identify great companies that aren't going away, folks. Apple, Google, Priceline, CMG, ISRIG, any of these. Okay? Now, there's a famous guy. His name is Bulkowski. He basically wrote the Bible on candlestick patterns. It's literally an encyclopedia of every single candlestick pattern. He's a brilliant guy, brilliant trader. You can Google him, and there's a ton of stuff that's free on there. One of the things he did is a study that identified over a course of several years. When is the best time to buy and sell in a bull market and a bear market? You guys need to write this down. I know you would, Jerry. You're a crazy man like me. You need to write this down because this works. You just got to have and grow some you-know-whats. I won't use the word because this is being recorded. In a bullish market, you buy on a Friday, sell on a Wednesday. In a bullish market, you buy on a Friday, sell on a Wednesday. In a bear market, you buy on a Monday and sell on a Thursday. Bear market, buy on a Monday, sell on a Thursday. So let me ask you folks a question. Is this a bull market or bear market? So I took a spread on this, 675, 685. As you see, I'm already in the money. So CMG, I've put all April, folks, because most of you are not shorter-term traders. You like to buy time, and I understand that. But CMG is along, Baidu's along, Tesla's along, Google's along, Amazon's along, Priceline's along. Well, I've made some good money off of Priceline this year, and I know we all have. That was the strike price, the 1200, that I shorted Priceline on about 2-3 weeks ago. So it's just real interesting. And of course, there's Netflix. Which one of these do you want me to discuss? It's 10 minutes to 5. You guys kind of, because I got to pick and choose. There's not enough time to go through all of this stuff. Oh, I do want to talk about, and then I'll go on to something else, and you guys can kind of take a look at this. It's crude oil. It's crude oil, WTI. No, what is crude? Somebody help me out. What is crude? Crude oil. Crude oil. What the heck is it? Not WTI. We could look at the futures, but I don't want to. Brentwood crude, WTIC, thank you. I thought it was WTI. It's Weston T Offshore Inc. That's not it. Crude oil. Yeah, it is WTI. I know. That's what I just typed in. And it's, for some reason, maybe there's a dollar sign before this. Sometimes TOS does that. No, it's certainly not that. I think that oil is bottomed, folks, is the point I'm trying to make. Brent crude. No, that's not it. Let's do this. You can see it's not what I want to use. Yeah, Sandy, I know that's the futures, though. That's you're using spot month, year, and everything else. I just wanted to show a chart of just crude oil by itself. Well, another one I want to tell you, bottom line is I think it's time to look at crude oil. I can't belabor this too much because of time. I think COP may be something to look at. It's a 10 out of 10 starting right about now. I've listed that. Dollar sign DWIC. Okay, let's try that. Nope, it's not pulling it up either. Okay. I believe oil's bottomed out. You guys can take a look at this. You got ConocoPhillips going up. So I've listed that right here. Even though these things probably should be changed to May and not April to give yourself enough time. And then you could go a little bit further out of the money. Same thing with Exxon. And I may just change that before I... Reason is if I change this to best profit per trade and say, all right, if oil is kind of bottomed out finally after being badly beat up and I go into May, it's still an 80% probability. The rating, don't pay attention too much to that because it's 53 days. That 53 days is dragging down the rating. The win percentage is what I'm more interested in. Best coordinates, again, that's giving me the 10 out of 10 right now, starting right about now. Same with Exxon. .75% probability about right now. You got the same thing. Exxon is not as strong as ConocoPhillips. ConocoPhillips is a company that when you look at it from a time perspective, and you look at every year from, now this was, 12 wasn't a good example because it ran up and then tanked hard by June, so that's not a good year. And it ran up a little bit here from the beginning of, well, no, that's not even a good year either. This chart isn't very good to give you an example of it. So I'm not going to belabor this. You guys can do some homework on this. A lot of people buy the 70s. 48 cents. Which do we have a historical average move on this? $4.78. Nah, this is not going to put me at 70, that's for sure. Puts me at 65. So I wouldn't do 70. Matter of fact, that'd probably be a little bit, 65 I could do if I'm buying May for $1.71. It's not that exorbitant on the $62 stock. Price line target 1400 by one of our esteemed members. He just told me that in the chat. And Zach has got it at 1279 on price line. Halliburton or Schlumberger. That's another one we could take a look at. HAL. 83%, but that's starting the beginning of April. What about best profit coming into May? Well, there you go. 91% probability out of the last 12 years on Halliburton with about a 10% move. $10 on that gives me about, what, 44 bucks, right? That's 43 putting me right underneath, so that's not bad. For $1.10 and a $40 stock, that's still less than 3%. Nice one, Jerry. Thank you. Schlumberger, I don't know. One that I found I'm kind of bouncing here, so because the time is starting to run out. I found this one. Never heard of these people. It came up on a search for me. When I looked at that, I said, wow. Wow. That's best profit per trade. What about best rating per coordinate? Wow. Okay. Best rating a whole zone. Still 90%er. So I said to myself, what's going on? Then, well, the first thing I do after I find something like this, when I go through a scan and I see great historical, good percentage move, I took out that year of 62%, so it's not that huge of a move. First thing I do, though, after this is there any open interest? Is there any activity in this trade that's even worth pursuing to analyze? So I'm going to go spot month. Whoa. I looked at that and I said, geez, 10,505 at the 90s? What about April? Wow, 11,957 at the 95s? Somebody came in on a short today. But who knows if they didn't do a credit spread. I don't know. Why all the volume, folks? The reason is that right there. Big open interest for April 95s, which is right there, the 11,000. However, companies under investigation for proposed buyout by Simon Properties. Evidently, they are the largest property management company for commercial properties out there. They're huge. Absolutely huge. What did I do, 5 years? Yeah, that's what I did. I looked at this growth record, and they're skyrocketing, huge divergence. So obviously, they're a buyout candidate. So be careful on that one. ETFs. I'm going to start talking a little bit more about ETFs because they're a way to play the market, folks, without necessarily the herky-jerkiness of an individual stock. You can play the different sectors, tech sectors, home building sectors, so forth and so on. These are all 2 times inverse, I think. I don't know. FAZ may be 3 times inverse. Anyways, I went online and I found 2 great sites that'll give you all the information. This one particular here, the first one, I just happened to find this Trader Mike. He's listed all of them. But this to me is probably not as strong as this person, which is really 2 times ETFs.com. And it's really cool because he's listed all ETFs, bull, if you want to be just bullish, right? Or just bearish, right? Or here's your 3-time ETFs. So anyways, great information for you guys to peruse. I've included that here. But let's take a look at SOS and SRS, or SSO, I should say. This is the ultra on the S&P 500. What does that mean? This is not a contrarian one. This one makes money if the S&P goes up. Their goal is to get 2 times daily earnings or 2 times revenue. So kind of nicely on the bottom, starting to pull up, right, at the 17 extreme. We have a historical 87% probability. And let's look at SRS. This is the one that you make money on. This is way, way overbought right now with linear regression coming down. This is a nice setup, folks. These are the kind of setups you want to see. I'm sorry, this is the real estate. This is the ultra short in the real estate, SRS. When you look at that chart, that looks really nice. Where is things sitting right now? Way up here, about the 85 percentile. Add 8 years, discount these 2 years. That's insane. That's 08, 09. We know what happened to the real estate market then. But even if you remove those years, you still have a 6 out of 6 year tank. And the fact that this thing is way, way overbought right now. So that's one. I had a client that all they traded is FAS and FAZ. Because one goes up, one goes down. And when one is going up, they do the other one down. And vice versa. They used an indicator from VectorVest. They used a 513 crossover, 5 EMA crossing a 13 EMA, and linear regression lines. That's it. And when the 513 crossed, along with the VectorVest indicator, I don't know what it was specific, I'll find out, along with the top of linear regression, they shorted, and then vice versa. These are easy things to play. There's FAS. This is on the Financial Bull. It's 3 times movement, folks, so you'll make some money on this quick. You can also lose money quick, too, so you got to be careful. So when this goes down, this goes up. But these are things to trade. You could look at 3.6 to 3.20. You got an 83% probability. If you there it is, 3.11 to 4.1, 16% move on the FAZ, which is the bear. So it's going to continue to go down. This thing has done nothing but continue to go down when you look at this. It just goes. Problem I don't like is the dollar amount. So I generally don't trade FAS. If I'm going to do something, I'm going to do, and you guys would like this better again because it's a bullish thing. It's the bullish 3 times movement. This isn't as strong. There it is, 6 out of 6. That's what I was looking for. 3.15 to 4.1. That's why I put it. So you can take a look at these ETFs. And the inverse and specific are the ones you want to get comfortable on the Dow, on the S&P 500, on the Russell. If anything, when the market starts to turn, I would do the inverse of the S&P 500, 2 times inverse of the S&P 500, as well as the Russell 2000 or 1000, small cap, large cap. Those are the ones that will give you a broad market perspective. They will not move as fast, but you'll capture a lion's share of the profit. And it won't be as fast and herky-jerky where you have to micromanage it as much as the 3 times movement. Okay, so you guys can take a look at those. Any other ones you want me to talk about? Do you think Fed is going to increase rate this Wednesday? No. Nike. Thank you for reminding me, Tom C. Thank you so much, sir. On the unusual volume on Wednesday 3/11, somebody came in bullish on Nike with 1,251 options, buying this month's expiration, meaning this week, of the 96.5 calls. So of that right there, of the 3,015, somebody came in with 1,251. And that was on Wednesday 3/11. On Thursday 3/12, the same individual came in and bought another 1,251 contracts of the March monthly expiration of the 96.5s. So you have, what is that, 1250 and 1250? 2,502 of that 3,000. Oh, and by the way, they paid $1.89. So they spent some money, folks, I guess is the point I'm trying to make. 2,502 times 1.89. Oops. I guess I should probably do it differently. 189 times 2502. $472,000 on a bullish move. A lot of bearish interest on Nike. It's one of the second most heavily shorted stocks on the market right now. You see 19,000 bearish came in here. I'm not trading Nike through earnings. If you noticed for earnings this week, I don't have it listed. Historically, Nike is a RUI, a run up into earnings, not a go through earnings. So I'm not, there's too much negative interest about it. Don't beat you up too bad about it, I won't. WSM earnings are not, oh yeah, they're coming out, what, is it this week? I believe they changed their earnings, the 18th, that's this Wednesday after market. WSM. I did my research a week ago on this thing. If nothing has materially changed from a fundamental or technical perspective, then it's still a trade. I had it here. They changed the date. Okay. You're going to hold through. One of our members, Nike is up to 97 in aftermarket. Oh, look at that pop. Some people have a talent of smelling out good trades. That's a nice pop right there up to 97. We'll see if it holds. We'll see if it holds. We'll see. If this was me in this trade, I would take my money off before earnings. I'm just too skeptical. There's just too much negative interest on Nike. But back to WSM, we have a historical. Williams-Sonoma. It's a historical good move, as I recall. Yeah, it's a historical good move. Even though this run started supposedly earlier, when I see that and I say, well, has the run moved? Well, it's had a pretty good run right here, and it seems to continue moving up. It's only at the 44 percentile, or 44 extreme on a 6-month. From a fundamental perspective, what do the analysts think about it? That concerns me. 15 hold. That concerns me. I don't know if they know something that we don't. Analysts' rating evidently has gone up. See, short-term price and intermediary price and long-term price are all green arrows up. This concerns me. Sometimes I don't listen to analysts because they're not always right. So unless you can do some digging, folks, to see is there something negative. Now, see, I don't have a company profile in Williams-Sonoma, so I can't look to Trevis. But if you just Google Trevis, T-R-E, I think it's Trefis, Trefis.com. Here it is. You can sign up for Trefis, what's driving the stock companies. I think there's a, look for a company, WSM. Search for WSM, found 6. I don't see what this is. April 25th, 12. Don't know. Anyways, do some research on it. I'm a little concerned because of this, but from a seasonal historical perspective, it just explodes. Here's the concern. It's when it started, when it ends, and when are earnings coming out. If you really look at this chart and you understand how to use it, you see it exploded, earnings, that's an earnings. When you see these very defined lines straight up or straight down, it means earnings. Something happened based on an earnings. So they evidently do well. However, then I'm also saying, where was this stock when it did well? Okay, it was way down here, way oversold from its historical. Where was it last year? Way down here. Where is it this year? Way up here. That concerns me a little bit, so I'd be a little bit careful. Okay, what are the stocks you want me to go over, folks? Speak, speak, speak. You see any on here you want me to go over? Or do you have any in mind that you're thinking of? Google? Let's take a look at Google. And everybody right now is a little trepid to make any kind of trade because of this whipsaw. So you've got to look at the bigger picture. Right? This is Google. Not a real strong time of year to trade. I mean, it's 90%. It does move. I did list it as part of the potential trades to look at. You know, if you look at the 90% historical with a 5.47 move, where would that put you at? Google today was up $8. So it's only $9 away from where I did my research over the weekend. So you'd have to adjust all of that. Yeah, Jose, I went over DRI already, Darden Industries, and I think it's a buy. That's what I listed. It's an earnings trade coming out this week. What am I doing? Google, April. Want to do a large spread? There you go, $20 spread. Could make a potential $1,000 on that. I wouldn't do that, $20 spread. You know, take the 5, just use 5%. I mean, if you want to be a little bit more conservative instead of being real anal like I am, using the exact, 5.47 and the exact stock price and everything else, just say 5%. Be conservative. Be underneath whatever that is. And say, okay, I expect about a 5% move. Is Google beat up like everything else is? I like to use 20-day 1 hour. See, 20-day 1 hour gives you a nice picture, doesn't it? Especially with a 90% linear regression. It really, when it bottoms, it bottoms. When it tops, it tops. And one of the things I see with Google is that price is staying above that 89. It's trying to pull up. So if I used a 5% move on 561, gives me a target of 589. 589 is between the 61.8 and the 78.6 of Fibonacci extension. So you want to play conservative? Maybe I'd look underneath the 61.8. 61.8 is always a resistance, always. I mean, very rarely. I mean, that's a turning point usually when I trade the E-minis. That's one that boy, if price hits that, I'm taking my profit, or if it's reversal, I'm getting out of a trade. So potential to 589. So we'd probably want to be again under 580. So we'd be looking perhaps at, I would still say the 570s. Because think about it, $12. How much is $12 in relationship to the stock? 12 divided by the stock price of 561. You're paying a 2.1% premium. It's still under 3%, so it's a still good buy. Somebody asked me to take a look at the SPYs. SPY is looks like a bullish move. 70%, not that great. Let me make sure I got accurate. Unless we take that whole area, and now it's a 90% long. Again, what if all this stuff that you're looking at indicate is generally and historically, without any anomalies or unknown events that take place, generally the market starts going up. So, Sandy, we got a 90% with a 5.49% average move. Got a breakout on the PPS. DPO is pulling up. That's what you're looking at from extensions. So, you know, if you took the average move, 5.49%, and said, okay, where does that put me at from a target standpoint? 208 times 1.05, I'm going to say 55, 216, right underneath 78, or right above 78.6. So between 213 and 215 would be a target spot. And you'd probably want to go into May. So, yeah, let's see. What do I have? 213. Look at this, man. Big bullish interest right here, folks. 10,000 contracts were bought, or perhaps sold, more than likely bought today at the 219. Where's 219? Let's do 1 year. Well, 221 is the top of linear regression on a 1 year. And the first Fibonacci extension is 222. You see that right up there? Can you see that? 222. So you're buying enough time. I could see why people are going out because it's May and stretching all the way to the 219s. I'm a little bit more conservative. I go closer to the money based on what I see this could do. Yeah, good hold until the, yes, I agree. April 210s, yeah, I like that. I like that. April 210s, I like. Should definitely have legs to be able to run that far. Okay, any other ones you want me to go over, folks? We're running already at 5:20. So as again, this thing is extended over. Going once, going twice. Forever hold your stocks. All right, folks, once again, thanks for attending. Be safe, good trading, and we will talk to you guys next week.